Hello and welcome to the special segment called MC Pro Select Stock of the Day. In this segment, we bring to you fundamentally strong stock ideas that you can consider in your portfolio. So today's stock of the day is Infosys. If we talk about the company, then it is India's leading IT service player. Operating for the last 40 years, carved out of a global leadership position. It operates in over 56 countries. If we talk about the Q4 financial year 2025, then a weak show was seen. The Q4 execution turned out to be disappointing. Revenue degrew 4.2% in reported and 3.5% in constant currency. Now, the management attributed the sharp decline in revenue to the lower third-party contracts. The usual seasonality, that is lower number of working days in Q4, also played a role in terms of the market, except for Europe. The other three markets degrew as well. Turning to industries, weakness was seen across the board. For the fiscal, revenue grew by 4.2%. Europe contributed meaningfully among the key markets. Let's also talk about the banking, financial services and insurance. Manufacturing and high-tech stood out among the industry verticals. Now, company alluded to the delayed decision-making and preferences for cost takeout, automation, efficiency gain projects. The company has not seen any major project ramp down, unlike some of its peers. Lower end of its financial year 2026 guidance assumes a pessimistic scenario of further deterioration in macro. Upper end bakes in stability, tad improvement. The revenue guidance of 0 to 3% in CC for financial year 2026 does not include the two recent acquisitions that could potentially add another 50 basis points to revenue. Margin a tad weak, unlikely to move up in a hurry. For the year, Infosys managed to improve the margins by 50 basis points. However, the operating margin for the quarter declined by 30 basis points to 21%. In fact, the company has guided to operating margin in the band of 20 to 22% of financial year 2026. Now, inflows steady, client matrix deteriorates within 24 large deals, of which 63% were net new. Large deal inflows were steady. Thanks to the fewer mega deals, the quantum of large deal inflows for financial year 2025 was down 35% at $11.6 billion. There has been a deterioration in the client matrix across the revenue bucket. Now, the net headcount addition has been negligible in the quarter despite a spike in attrition. Management reiterated its campus hiring target of 20,000 in financial year 2026 against 15,000 in the previous year. The journey to recovery is contingent on the macro and could be bumpy. However, post the steep correction, the valuation is undemanding with a pre-tax dividend yield of 3%. With that, it's a wrap. For more such updates, keep watching Moneycontrol.com and please like, share and subscribe to Moneycontrol's YouTube channel.